of what somebody gets over what he commits. Excessive interest, or because the tendency is there to interpret it as just interest. It's something that is broader than that concept. But Allah in the Quran had mentioned about the fact that riba itself, is forbidden, and not, and I think that there is the hadith that says it's not the only the person who gives it, the person who receives it, the person who records it. The entire transaction, as it relates to the financial transactions as we have it today. The issue of gambling, issue of bribery, fraud, theft. In business today, they call bribery mobilization fee. It's just like something you just put under the file and things like that, and because your file will not move and things. So all these do have consequences because they remove the barakah that should ordinarily come from that. Then, of course, businesses of intoxicants, alcohol and all this shade, prostitution, or things that facilitate them. All these are very clear, and these are some ayahs from the Quran that prohibits these practices. Again, I want to allude to the idea that I started with, that what is clear, what is forbidden is clear, and what is allowed, is clear. In between, there are shady things. We seek the opinion of scholars. And you ask what could be shady. Today, we have issues of cryptocurrency. It's a form of investment. People put money into it, and we say, is it halal? Is it haram? And things like that. Then there will be the argument here and there. If you are focusing more on the cryptocurrency aspect, it may be haram. If it is the crypto assets in terms of digital token and things like that, it may be. But again, it's an ongoing debate. I'm not a Sharia scholar. I will not delve into that. But it's better, where things are not clear, we ask those who know, and not those who will tell us what we want. Because later on, I'll get to the biases. In terms of seeking clarification at times, it's very convenient for us to go and ask those who tell us what we want to hear. And that also has implications. So, what halal opportunities are there? There are so many of them. I've just classified into this 7, just for the sake of convenience of presentation. And they could also be here and there. But at least in the context of Malaysia, this is what we know. We always talk about the issue of Daruriya, Hajia, and Tahsiniya. Daruriya because I'm doing it because of necessity. Hajia, I'm doing it because of convenience. Tahsiniya, I'm doing it because of refinement. To a reasonable extent in Malaysia, I think the issue of Daruriya has been resolved to a reasonable extent because there are always opportunities that you can have. You may not find in some other countries, such kind of opportunities. But in the case of Malaysia, I think there are a number of opportunities, and we just look at some of them. It doesn't mean, again, they are exhaustive. Now, this would be basically not looking entirely at what business you do as a person, or what investment you have as a person, or you have with another person. It's looked at from the point of view of you have some money which you have saved over time, or you have inherited, as the case may be, and you want to place in some kind of business opportunities or investment opportunities that exist there. So we have what we call the Islamic collective investment schemes. Basically, they are usually funds, which say unit trust, would have mutual funds. There are quite a number of them, and are Sharia compliant in the case of Malaysia. In fact, if you look at the funds market in Malaysia, I think we have 54% are Sharia compliant. And the way the Securities Commission has done it is that they have undergone certain screening methodology that you would not have to bother as long as you check the website and you find that these funds are listed and things like that. They are taking care of that. And that's one of the reasons I'm saying in the case of Malaysia, certain things have been taken care of and we will not have too much excuse as the case may be. But for those of us who in our various employments, there are some form of pensions and things like that. Of course, I still know some friends who have not moved theirs to the Islamic path because it's already, divided. Now, if you want it to be in the Sharia compliant path, then you just indicate accordingly. And of course, Hajj fund is meant for pilgrimage. It's meant for to save over time to be able to meet pilgrimage requirements. But again, it's also a form of savings and investment because they actually do put money into those. But the one that I want to focus on is the next one, which is the Sharia compliant stocks and equities. Because I think in the case of Malaysia, over 800 stocks are Sharia compliant. So, and they cut across various sectors from plantation to construction to whatever you want to put money into. And this basically involves you becoming a shareholder in a company, because by buying shares, you are not only entitled to the earnings of that particular organization, you are also entitled to the asset. Of course, as a residual claimant, after they have paid, every other creditors that they owe, you as a residual claimant will have that. So if you check Bursa Malaysia website, for instance, they already provided a list of these Sharia compliant stocks. And not only that, the procedures that they use in their screening methodology to tell you that these are actually Sharia compliant. And as the list changes from, I think they do every May and every November, you would see which companies are there. So in the event that you invest in a particular company which used to be Sharia compliant and now it's no longer Sharia compliant, there are also guidelines on what you can do in that instance. For example, it's stated there that if the cost of you buying the shares, when it was Sharia compliant, is far more than the cost now that it's no longer Sharia compliant, hold on to it. Is that okay? Hold on to it till it appreciates, or they do some form of rights issue or bonus issues and things like that that can allow you to compensate for what you would have lost either. Because as at when you invested, it was Sharia compliant. Is that okay? The intent is not to make you worse off. Whatever dividends you have received before then, it's up to you. Capital gains, maybe the shares have appreciated in value, it's up to you. But once it becomes Sharia not compliant, you have to take action therefore. But if, let's say, the worth today is more than what you have bought it at that time, then they say, sell it immediately, dispose of it, and whatever excess you get, after you have removed your own cost, you can donate to charity, or, as the case may be, if you are selling at par, then it's exactly the cost price that you have. So the point I'm just trying to make is that there are Sharia screening methodologies there. There are industries that are subjected to the 5% rule, because it's possible. Things are very intertwined now. Some organizations, by the virtue of the way they operate, cannot be entirely be 100% Sharia compliant. There will be elements in their operation, no matter how small. So there are certain companies that are listed that, to the extent that their revenue is not up to 5% from the Sharia non-compliance, they are Sharia compliant. There are certain industries that they have indicated that if it's up to that, not more than 20%. For an example, if you invest in real estate, it's possible that you have a shopping complex that you have invested in. Not everybody who rents a shop there will be selling Sharia compliant. They may have certain things so the proportion of that should not be more than 20%. So all these criteria are well listed that can guide an investor and ensure that you are not being misled. Another one that is of interest is the exchange traded fund and the real estate investment trust. So in these two instances, you don't want to take the risk alone. So I don't want to just buy a condo or build a shopping complex or whatever, but I'm interested in real estate. So the real estate investment trust is the kind of pooling of funds for investors who are very much interested in such kind of investment. And at the end of the day, it helps you to diversify. It's very much, in my view, less risky because there is a professional fund manager that is doing that. The return is also very, very good. But again, we have to bear in mind, nothing is guaranteed because the return is subject to the performance of such investment. I think a good example would be during COVID, where the price of rentals went down because people were working from home, businesses were closing and things like that. So things could happen, but naturally it's a very good business. But one of the things they have also done in the case of mine, and of course ETF is where you also have exchange traded fund, where a collection of a portfolio of investment that tries to mimic the market. Is that okay? So there is a Sharia compliant one, that's why you see the I in front of both the rates and the ETF that the Bursa had made to ensure that the funds or the investments that are put into this portfolio are those that have been certified to be Sharia compliant. But recently, there is also something they have done which is very unique to the case of Malaysia. It is combining a WACC feature with it to say, okay, whatever, so I have these funds, and I want to invest either in exchange traded fund or real estate investment fund. But alhamdulillah, Allah has so blessed me. I'm not so much interested in the returns for my sustainability. But I could also not just keep this fund, idle. So I want to invest, and whatever returns that come therefrom, I want them to put in work. So they have linked it. There's another one which they have done to say that, okay, if for instance, there are certain companies that they have registered, if I want to mention maybe a particular beneficiary to be the one to continue to enjoy the benefit from this investment after I've passed on, then I will mention to them, and in the event that death comes and things like that, seamlessly they will be able to do that. It reduces a lot of friction, a lot of whatever and things like that, because documentations are well signed, and if by Allah's design the person to whom I thought to be the benefactor died or dies before me, I only need to go there to make the correction. So these are some of the things that they are looking at for the possibility of integrating the social finance. The fact that Islam itself is theologically communitarian in terms of its philosophy. And Sharia wants to remove hardship, Sharia wants to promote social justice, Sharia wants to promote distribution of wealth. So all these are things that they are doing. Now when it comes to Sukuk, Malaysia is the hub of Sukuk. I think it's arguably the largest issuers of Sukuk in the world, followed by Saudi Arabia. Now, it could be sovereign Sukuk, it could be what we call corporate Sukuk. These are, the Islamic alternatives to the conventional bonds. In a plain vanilla bond, what do? Companies that need funds would sell bonds. The bondholders, once they buy, are entitled to periodic interests and their principal at the end of the bond life. But Sukuk is not like that, because Sukuk is ring-fenced. One, it is tied to a particular asset that they want to, fund, and the returns you get are based on the performance of that particular underlying asset. So in the case of Malaysia, the issuances are constant, and the returns also are very, 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 very good. There is an investment accounts platform. Last time we used to have our deposit accounts where we just put money in the bank and we get bothered. Then they give you some interest payment, and you start thinking of, what do I do with it? Should I put it to charity? Should I just leave it there? So in the case of Malaysia, the investment account platform was created when the Islamic Financial Services Act was issued in 2013. And what it means is that banks now will separate between your deposit account and your investment account. Your investment account is based on mudaraba or musharaka, or some form of equity investment, where if there is profit, you share together. If there is loss, you lose your deposit. Now, PIDM, the deposit insurance, does not cover this because it is not a deposit, it's an investment. So you become the Rabbul Mal, the bank becomes the Mudari, and whatever returns, they give you the return. And it's a very seamless boarding process. 6 banks have come together to form a consortium that they have this platform that is being managed. What do you need to do? You register, as an investment accounting platform investor with your bank, and they will give you selected, investment opportunities that exist there. They allow you to view these selected investment opportunities. But most importantly, they just don't onboard you like that. They also ensure that you go through what they call the suitability test. So this will look at your financial capability, it will look at your investment needs, and most importantly, your knowledge and experience. So the combination of all this, you need to meet a particular threshold. Only then the bank will move you to the next stage, to ask you to pay, and they onboard you, create an account for you, investment account, and of course, periodically you receive reports on how well the investment is performing. You also can check, in fact, and of course, you get your return. And if you want to move out, you get your principal. Now, this can be restricted or unrestricted. When it is restricted, you say that you can only invest in this sector and no other sector. So the bank stays on that. But where it is not restricted, the bank pulls the funds together and they do that. Another interesting thing in the case of Malaysia is that they don't commingle, because in some other countries, commingling, so the bank gets this investment, and again, they get money from the shareholders, they commingle, and that also creates an issue. But in the case of Malaysia, such commingling is not encouraged. So it's another opportunity where Muslims can put money. Of course, tangible commodities Gold is always a very stable kind of investment. Of course, it's priced in USD, and if you see the volatility at times, maybe American election is coming now, maybe they are financing some wars here and there. So it may respond in terms of movement, but by and large, if you take the time series over time, you realize that it's a very kind of a reliable investment. It could also be in property. I think, mashallah, so many of our fathers here, you do have property PVAs or elsewhere, as the case may be. The bottom line here is to just ensure some form of diversification. It could be agricultural, commodities, and so on and so forth. I've talked about crypto earlier, crypto assets. When it comes to the currency, I'm not a Sharia scholar, but the louder voice you hear in that regards is that maybe it's not something that people should engage in. Of course, we have Ethereum, we have Bitcoin and all those stuff, and you see the volatility and things like that, and people would even argue that to mine those, the cost of mining them on the environment even will defeat the financial purpose, that they are doing. But again, these are arguments that are there. But we also have, digital tokens that are based on blockchain technology that have securities backing them, maybe some artwork or some kind of artifact and things like that that have been digitized and put into the coin and things like that. Crowdfunding, especially equity crowdfunding, where people pool funds together to meet a particular cause. I think one of the very common platforms in Malaysia, there are about 6 of them, is Ethis, where they pool funds, to finance businesses, to finance real estate, to finance other halal opportunities. And you can also have P2P, where person to person, these platforms allow your own investment interest as a surplus spending unit, and there is a deficit spending unit that needs funds to match them together, and they go on. So these are some of the investment opportunities there are. Now, this is just an example, quick one, of how the rates I mentioned earlier, operates. The investor, of course, puts money. The tick line would show the money, and the broken line will show whatever the person gets in return. So if the investor puts money in the high rate, of course, eventually he will get a return. But the money in the high rate will be invested in various properties: property A, property B, property C, PV8, PV12, PV whatever, and other, real estate, whatever, so that there is proper diversification and proper management. Why do we say proper management? Because there is a fund manager that, manages these funds with sophisticated investment knowledge. Of course, they get a fee for doing that, but most importantly is that there is also a trustee to ensure that, that some form of governance is there to ensure that things are done in the proper way. We do the right thing and we do things rightly. And in addition to that, there is also the property manager, because the fund manager may not necessarily have the skills to manage the property. So the fund comes to them, they know where to put the fund, manage the funds, but the property itself, because the return that you get depends on the performance of that property. So if it's not properly maintained, that would also cause some level of impairment to the investment. So the maintenance and management fee will be paid to the project manager, but most importantly, the tenants who eventually buys off such would pay rental over time, and everybody will get in return for what he has paid for some form of either fee, profit, or properties, the useful front of the property, the usage of the property, as the case may be. Now, so but when we do all this, the issue is that at times we are either unconscious, subconscious, or unconsciously subconscious of certain biases that make us do certain things. Now, this is not only peculiar to Muslims, but because we have an extra layer that is not only the return, it's also, there is a spiritual fruit that comes into it. So that will take us, to a higher level compared to the ordinary investor. So there is this argument to also say that you don't look at the Homo economicus, you also look at the Homo Islamicus, because at the end of the day, both would have to go together. Now, there are about 20 of those, and I do not intend to run through them. But we would see that some of them has to do with our emotions. At times, we are happy. At times, we are sad. At times, we are afraid. At times, we are confident. At times, and while I was still in UIA, there was a research that we have done together. It was a PhD thesis actually on neurofinance. We experimented where investors would be allowed to watch, for instance, football or horror movie or whatever, and based on some, I've forgotten what they call it now, it's a form of cap, but it has notes and things like that. So it will connect, because the brain also, the way it's done, there are parts, if somebody wants to lie, there is the part that tells lies. If somebody is happy, there is a part that, so the neurons and things like that. So EEG, electroencephalogram, something like that. Yes. In fact, it was done in your Kulia with Dr. Marini. So she was a So one of the things we realized is that, and interestingly, maybe as an aside, they even did that when somebody reads the Quran. The neurons that get activated is different when you read the Quran and things like that. So we realized that investors rely so much on their emotions, and the same fundamentals, they will react differently depending on whether they are afraid, if they have just watched a horror movie or they have just watched football. Their profile is the same in terms of risk aversion or in terms of their attributes as investors, but they will react differently. So one of the biases here is loss aversion. The tendency to prefer avoiding losses to acquiring gains, and this often leads to panic selling. People just don't like to make losses. They just do for whatever reasons, and at the slightest occurrence of losses, then what they do is they enter into the panic mode and they want to sell because they think it would continue. But it's just the reality of that. And as Muslims, we have always been told that once it happens, what do you say? Inna lillahi wa inna ilaihi raji'un. Because it's from Allah, and if He likes, He would make it successful. If He likes, it would also happen. But usually what we see is that Muslims, even though we would say that, but the reality is that the moment loss sets in. So most of the investors that we did work with, they would rather sell because they want to avoid loss. That the point we want to take from here is that some investments do have intrinsic value. Their losses could be by happenstance, not by design, not because they are not good, but at that moment something fundamental is wrong. If they are kept, they will not only bounce back, they would even do better, as the case may be. So the point here is to say an intrinsic value assessment is very, very important, and that has to be done today, not based on what had happened before. Somebody could have a streak of losses, but with one investment, he can make up all of those. And he could have been winning, and suddenly it would. So it's a reality. So one of the fundamental things as Muslim investor is to say that losses are possible. And Allah, as to, I think there's an hadith which I'll share later to say that if such happens and we say, in the law that there's always benefit that comes from it, if I can quickly find it here. So in the event of loss, the greatest reward comes with the greatest trial. So when Allah loves the people, He tests them. Acceptance of these trials lead to His pleasure, while discontent ends His wrath. And I think Sheikh Ibn Taymiyyah had also mentioned that the calamity that makes you turn to Allah is better than the blessings that make you forget Allah. So I think that's very powerful, because when people make gains, it's something that is pleasant, and it's likely that such blessings may make them to attribute it to their own dexterity in terms of investment, rather than seeing it as just a blessing from Allah. But again, when calamity happens, it says that it makes people then turn to Allah. So the first one is regret, loss aversion. But there is also another one that is closely related to that, which is called regret aversion. People, as much as possible, would either not take decision or not act because they are afraid that they don't want, to go through the emotional pain that comes with past failures, as the case may be. Then there is a self-control bias, people cannot think long term. Investment is not a sprint, it's a marathon. You have to be there for the long term. Of course, there are some short investments, there are some quick fixes you can do in and out, but often than not, it is something that is long term, and people do not have that self-control bias. They are not that disciplined. Remember, we talked about desire, discipline, determination, and what's the other D? I forgot it. Dedication. So it requires all those. People don't do that. Then there is this concept of endowment effect. The tendency for investors to overvalue assets that they already hold over those that they do not. So what this implies is that whether the investment was bought or inherited, and this happens a lot of the time, maybe with our cars, then because I also did the same, during COVID, I had 2 cars, and there was one that even before COVID I was not driving very far. But that car, I have some kind of feelings for it, because when I was living in Eastern, shuttling back and forth, it was this car, and it was not breaking. You have some attachment to certain things, that you don't just let go because you see them as some form of endowment. But this also may not be making so much investment sense as the case may be. There is the overconfidence bias, the tendency for us, and I think it's linked to the first one, to think that when things happen, it is due to our knowledge, our ability, and it makes us not to feel that it's just one of the grace of Allah. We mentioned last time also about the 2 farmers in Surah Al-Kahf, where one of them was very proud and very arrogant, thinking that all that he has was just because he's superior to the other, as the case may be. So here we have to plan properly, but we also have to pray, because Allah's rahmah is what makes things. No matter how qualified we are from a technical point of view, we need Allah's intervention. Then there is a herding behavior. Everybody is doing it, I have to do it. Everybody is investing in gold, I have to. Everybody is investing in stocks, I have to. Everybody is doing it. So